Now, the underlying theme for our next keynote session, in fact, is all about AI's promise and peril. And this is where we're focusing on building responsible intelligence for inclusive finance. This is a keynote address, and our keynote speaker is already here inside the hall to address the gathering. So with that, ladies and gentlemen, we have the august presence of none other than Mr. Ajay Kumar Choudhary, Non-Executive Chairman and Independent Director, National Payments Corporation of India, NPCI. Can we also have a dynamic round of applause to welcome on stage the very dynamic Mr. Ajay Kumar Choudhary.
Good morning to everyone. Esteemed members of financial institutions, colleagues from Reserve Bank of India, other regulatory bodies, and NPCI Group, the Fintech ecosystem, academia, press and media, our global partners, and distinguished guests. It is my privilege to welcome all of you to this 6th Global Fintech Fest 2025. Over the years, this gathering has become one of the most important platforms for dialogue between innovators, regulators, industry leaders, and policymakers. It is here that ideas have been tested, collaboration forged, and the future of digital finance shaped. To be together once again in this forum reminds us that finance is not only about systems and numbers, it is about collective purpose and shared progress. This year's theme, Empowering Finance for a Better World Powered by AI, means artificial intelligence, helps us to recognize that the most powerful application of AI are those that can augment human potential materially and delivers inclusion at scale and strengthen the resilience of our financial system. AI has moved from the margins to the mainstream. It is reshaping how we design, how we deliver, and experience financial services, opening doors for efficiency, inclusion, and resilience. Our task today is to explore how AI can be harnessed not only to power finance, but to shape a better, fairer, and more secure world. We meet at a time when AI has become the defining force of transformation in financial services. It carries immense potential to drive efficiency, expand inclusion, and speak innovation, while also demanding vigilance against new forms of vulnerabilities. In other words, it is both an opportunity and a challenge. And its true impact will be shaped by the choices what we make. Now, looking at the two faces of the future, as we speak of AI, two terms will shape much of our conversation in future, in the next few years. One is generative AI, and second one is the agentic AI. These are not just buzzwords, they describe the next frontier in how intelligence can serve finance. Generative AI is the intelligence that creates. It can write, it can summarize, it can analyze, and it can reason across vast amount of information. It gives us ideas and insights at a speed and scale that were once impossible. Agentic AI goes a step further. It does not just generate answers. It can also proactively pursue goals by setting goals, making decisions, and carrying out complex, multi-step tasks on its own. If generative AI provides the voice, agentic AI provides the hands that act on the voice by pursuing innovation and innovative solutions. Investment in AI, by the way, you must be knowing, is expected to touch nearly USD 100 billion across banking, insurance, capital market, and payment, likely to be by 2027. Further, 78% financial organizations, as of now, use AI at least in one business function, a significant uptick from 53% in 2023. The industry is thus no longer debating if AI will matter. It is preparing for how far and how fast it will take us. The real question is whether we harness this power carefully to support trust, inclusion, and resilience. Now, looking at the promise of this artificial and augmented intelligence, the opportunity before us is to turn this technology into true partners in finance by enabling and extending our capacity to serve, to protect, and to innovate. We already see its promises in strengthening defense against fraud and money laundering. It is making compliance faster, operation more efficient, and decisions more consistent. It is also raising resilience even as it lowers cost. Early study shows that productivity gain could be immense. Can you imagine? As much as USD 200 to 400 billion annually for the banks worldwide. Experts including Michael S. Barr, he is the vice chair of Federal Reserve Supervisory System in California, take this conversation further. As per Mr. Barr, there are possibly two models relating to AI ahead. One is incremental, where AI quietly supports and strengthens what humans already do, and where AI remains a powerful assistant boosting efficiency while humans stay firmly in charge. The other is transformative, other than the incremental, the second model, where AI fundamentally extends human capability and reshapes the way services are delivered. This involves automation and replacement of certain tasks and altering job functions and business models. The second model, obviously, would have more profound effect on skills, on jobs, and on how institutions organize themselves. This is why the way forward must keep human at the center. I'll repeat. This is why way forward must keep human at center. Technology must serve resilience, inclusion, and trust. The true measure of progress will not be what machines can do, but how wisely we choose to guide them. Now, looking at the innovation in practice, the future of AI in finance is no more a vision. It is already here. As Christine Lagarde, you know, that president of ECB, has reminded us, quote, AI is not tomorrow's story. It is shaping our world today, unquote. Project Aurora, you must be aware that it's a BIS Innovation Hub Nordic Center project, which are detecting and combating money laundering activity, is already proving how AI and its capabilities can strengthen our systems. By combining synthetic data, privacy-enhancing technologies, and cross-border collaboration, it has cut false positives by 80% and triple detection of complex laundering networks. These are not abstract gains. They translate into stronger protections, more trust in our institutions, and a system that not only responds to risk, but anticipates it. AI is also moving financial advisors out of the boardroom and into the hands of everyone. Robo-advisors, you are aware, are already helping families plan their savings, invest small amounts, and make sense of choices that used to feel overwhelming earlier. Inside financial institutions, the change is already visible. In legal and compliance team, contracts that once took days to review are now summarized in minutes, freeing the experts to focus on judgment rather than paperwork. On trading desk, AI is optimizing execution strategy, saving cost by millions while improving precision. In risk and compliance, machine learning systems are scanning the vast streams of transactions and regulatory filings, reducing errors and making oversight faster and more reliable. And even on the customer front line, AI assistants can hold conversation, answer complex questions, and guide people through financial choices with accuracy and empathy. In every corner, AI is helping banks do more, do it faster, and do it at lower cost. Taken together, these are the glimpses of tomorrow happening today. They remind us that the challenge before us is not whether this future will arrive, it is already here. The challenge is how we choose it and how we shape it. Now, whenever we talk about any innovations, always comes a duty to pause and reflect, because we have to balance the promise with the prudence. Artificial intelligence is no exception. As Norbert Wiener, the computer scientist, mathematician, and known cybernetics expert, reminded us, quote, "The world of the future will be an even more demanding struggle against the limitations of our intelligence, not the limitations of our machine," unquote. The risks are real and they are already visible. We know that AI systems can produce errors that appear convincing but are flawed. Experts call these hallucinations. Even when results look credible, they may be inaccurate and misleading and difficult to explain. This challenge of explainability makes oversight and accountability more complex. These are not small glitches. In finance, one inaccurate model can mean a wrong credit decision, a compliance failure, and most importantly, breach of trust. It is also important to note that AI and ML models are only as sound as the data they are built on. If the data is incomplete, if data is biased or of poor quality, those weaknesses will be reflected in the outputs. This is why data governance is critical to ensure accuracy, confidentiality, and clarity about sources. Now, also look about the risk relating to the financial stability in this age of AI. It has also become a discussion point relating to the financial stability. The Basel Committee has warned that highly automated models can amplify financial cycles, lifting markets higher in good time, but may deepen the fall in stress. The Financial Stability Institute has cautioned that unchecked adoption could magnify vulnerabilities through correlations, concentration, and cyber risk, the 3C. The IMF and BIS have both underlined that AI, if left unguided, they evolve into a source of systemic risk. The convergence of a strategy driven by AI-powered analytics, each seeking to maximize short-term profit, can lead to herding behavior and a dangerous concentration of risk. In such an environment, market participation may unknowingly reinforce one another's position, potentially inflating asset bubbles and heightening volatility across capital market. It is therefore imperative that our governance framework evolve in tandem with technology, ensuring that innovation is matched by robust risk management and commitment to financial stability. Now, look at the concern on resilience. It is not only relating to financial, as far as AI is concerned. It is some infrastructural. The AI infrastructure depends on the 5 interdependent layers. I'll just mention all 5. At the base, the first AI infrastructure are specialized chips that power complex computation. The second layer is cloud infrastructure that hosts and train models. The third layer is the vast database on which the models are trained. And obviously on the top sits the large foundation model adaptable to many users. And the last, the fifth layer, is the application that brings AI into everyday life. Each layer is essential. Hardware provides the power, cloud the backbone, data the fuel, the foundation models the engines, and application the outcomes we experience. However, concentration is one of the pressing concerns here, which is not just about providers, it runs through the very infrastructure of AI, from chips to clouds to models. One company makes 90% of advanced processor. 3 firms control most cloud capacity, and a handful entities dominate foundation models. These systemic dependency, I'll repeat, these systemic dependency affect not only finance, but also economic sovereignty and national security. This is why our task as policymakers, supervisors, and industry leaders is to guide the innovation. With the diverse range of stakeholders and markets involved in the AI supply chain across borders, domestic and international collaboration between competent authorities will be the key. That means building guardrails, diversifying dependency, and cooperation across border may secure the foundation of this new era. So we must be clear. AI is a dual-use technology. It can serve progress or it can amplify risk. It can extend inclusion or it can deepen divide. It can strengthen stability or it can weaken it. The outcome will depend on how responsibly we innovate, how firmly we govern, and how prudently we diversify, and how wisely we balance speed with safeguards. This is why responsible AI, I'll repeat, responsible AI is not a slogan, it is only the way forward. Now, I'll touch upon a little bit on India's leadership in inclusive innovation, including AI. I understand Minister is coming and will talk about Bharat AI, etc. I'll not touch upon that. I'll talk about a little bit on NPCI. Amidst the global debate on risk and resilience, India has shown that inclusion at scale is not only possible, but it is already a reality in 2025. India is processing more digital transactions than almost any other economy in the world, driven by the scale and trust of the Unified Payments Interface, what we know it, UPI. UPI today accounts for most retail payments in our country with more than 20 billion transactions a month, proving the world-class infrastructure can be built for the masses. At NPCI, we are proud to have led this journey from UPI Lite for low bandwidth regions to UPI for her, empowering women entrepreneurs to 123 Pay, bringing digital payments to feature phones. We have made innovation a tool of access. These are not pilots, they are the live systems used by millions every day. We are also embracing AI responsibly in our own operations. Our federated AI model currently runs on a pilot basis, are strengthening fraud detection by allowing banks to share intelligence without sharing data. We are deploying AI to identify mule accounts and block suspicious activity in real time. We are also working with leading institutes like Indian Institute of Science to build deep tech research capabilities that ensure India remains at the frontier of the innovation. We are also building intelligence into payments. Our own small language model is being trained for India's uniquely diversity of languages and users. It will help make digital payments smarter and more intuitive by simplifying complaint resolution. And our ambition does not stop at our borders. Our motto is Global Digital Public Good. Global Digital Public Good. Under this philosophy, NPCI International, one of the subsidiaries, UPI is linking with systems in Asia, Africa, Middle East, Europe, and beyond. Our vision is to be a leader in empowering global citizens with accessible digital payment solutions and help them, especially the Global South, to design and launch their own sovereign, interoperable, and resilient real-time payment system. Another pillar of our strategy is interoperability, that is expanding the international acceptance of UPI, RuPay, and other NPCI innovations of offering different products. Equally important is our work for the cross-border remittances. Our efforts are directed at building affordable, secure, and efficient corridors that reduce cost and increase convenience, aligning with the G20 objective of lowering remittance charge globally. In our constant efforts to improve our offering to our customer, NPCI Bharat Bill Pay Limited, now we call it Bharat Connect, is launched an upcoming platform to standardize online merchant transactions across net banking and mobile banking channels, enhancing interoperability, settlement efficiency, and customer experiences. You are aware about the Bheem app. We are building a sovereign digital payment alternative, which is trusted by every Indian. Our newest subsidiary we have launched just a few months before, that we call it NPI Tech Solutions Limited, that is NTSL, is where experimentation and breakthrough innovations will happen. We are excited to visualize NTSL to emerge as a cradle for future tech innovations in India, a space where bold ideas can be nurtured into reality for the digital economy. This year at the Global Fintech Fest, we are proud to showcase a new wave of innovation in coming 3 days. In digital payments, more than 10 products will be launched, 4 by Governor, 3 by Secretary of Finance, I think 3 by Deputy Governor, and 1 by me. Each of these has been designed with the purpose of making payments easier, safer, and more convenient for our users. We are strengthening security with smarter ways to protect transactions and adding new layer of transparency and accountability. These innovations will simplify payments for daily purchases, travel, and across different devices, reflecting our commitment to keep payments inclusive, secure, and future-ready. As may be appreciated, they all are about setting the direction for the future of finance, rooted in resilience, inclusion, and trust. This is the essence of India's leadership. Innovation anchored in inclusion, scale anchored in resilience. We are showing the world that AI in fintech can be harnessed not only for efficiency, but for equity. Coming to the conclusion, let us pause on the paradox at the heart of artificial intelligence. It holds within it the blessings of progress and the curse of risk. It can extend the reach of finance, make our system stronger, and open doors of opportunities that were once closed. But it can also carry risk, and if we let it run unchecked, then we don't choices, then it will create problem. The choices is not with the technology. The choice lies in us, what we choose for. That is why it is important to remember that humans, not machines, will shape the outcome. AI is a tool, and its value will depend entirely on the intent with which we use it. If we apply it with vision, discipline, and responsibility, it can widen access, build resilience, and make growth more inclusive. If we neglect these duties, it may magnify the very vulnerability we seek to avoid. In this context, our first task is to build the knowledge and skill to use wisely, train our people, build expertise, and apply the technology responsibly. The second task is to keep human judgment at the core of finance. AI must support decision-making, not replace it. The third is to guide adoption with clarity and foresight. And the fourth task is the governance and risk management, very critical, and it must keep pace in addressing issues relating to data governance, model biases, accountability, and third-party concentration. And above all, we must work together to seize the opportunities of AI, to confront the risk and govern this technology with cooperation across regulators, firms, and nations. No single institution, no single nation or country can carry this task alone. Let me now conclude with the word of Antonio Guterres, Secretary General of UN. Quote, "We must treat artificial intelligence as humanity's ally. It must be a force for good for all." Unquote. That is a charge before us. If we rise to this responsibility together, we can build a future where finance is more inclusive, more secure, and more resilient. A future powered by AI, but guided always by human being and for the human purpose. Thank you. Jai Hind.